levels as areas of inflection to create opportunity. In addition to price action trades, focus on the morning hours to give us those opportunities. We believe that the dynamics work better for us in the morning than they do in the afternoon. You saw yesterday afternoon, if you were trading, how the volatility was all over the place yesterday afternoon as the market was kind of dealing with this employment revision that was coming out as we come up here to the 62 area really quickly. And just make sure you keep your stops in place no matter what. Always keeping your stops in place. And again, probably about 3-point stops, probably 2 to 3-point stops, depending on your risk tolerance. That's what we're looking at. Coming up here to 62 area now. Again, make sure you keep your stops in place and also peel some profits up when we get a rotation, especially if you've got in the top end of the range there. All right, getting a little bit of a rotation here against our first resistance area. I know it came up quick, but market opened up, and that's where we're at. Again, if you got in there at 63, getting a nice little rotation here off of that. Take some profit, peel some profits off. Again, make sure you keep your stops in place. We're not going to love any trade done. If you took some you take some contracts off the table, and then see what the market will do after that. Nothing wrong with peeling some. If you're trading multiple contracts, taking some profits and then looking for a next opportunity, and if we're going to get them, and that way you take some profits there and you minimize your risk exposure. Market was all over the place yesterday afternoon because of this revision of the employment numbers, the revision for a year. I guess they were overstating, or the numbers were overstated by about 850 or 80, I think was the number. 1,000. Yes, it is what it is. I don't know. They all overstate or understate depending on what makes them feel good, I guess. I work in the 62 area here a little bit. Trying to give us a little bit of a rotation here. Again, like I said, peel some profits off if you're trading multiple contracts. Nothing wrong with that. All right, let's see if we have any other numbers coming out here this morning. Let's see here. There we go. Now, tomorrow is the Jackson Hole conversation with Powell, so that's going to be interesting. All right, this morning we have 8:45, so in about 10 minutes or so, we have PMI composite. And then at 9 o'clock, existing home sales. So a couple numbers here to be concerned about as we're trying so hard to turn over here. It's trying so hard to turn over for us. And again, like I said, take some profits off. Keep your stops in place. Looking to 3 points profit targets and 3-point stops, something like that. All right, giving us a rotation right now, especially if you got in at the top end there at 63 area. Nothing wrong with that. And getting a nice rotation here against it. So nice little opportunity here. Just had to wait a while. Just kind of hung there a little bit. Of course, popped up to 64. Got if you got in at 63 against our top end of the range, then you did okay. And now we're just kind of hanging here. Big Suda 15.99. So basically about 16, but a 15 handle. Um, Again, rallying again. Yesterday's volatility was all over the place yesterday. If you were trading, just nuts as they were trying to guess as to what the number was, and that's why you had some volatility early. And then also, like I said, even when we were trading, the volume is so light that there was not that much volatility in there because I mean it was moving around because the volume was light, and that's the unfortunate part, especially in the afternoon. That happens all the time, so you have to. And that's why we try to stay away from the afternoon trade. But we had it yesterday during it right as we were stopped trading there about around 10 o'clock ish. Started getting a little bit sticky, and I even suggested expanding the stops there a little bit, only because we have to. This is where we start out 2 or 3 points, but we have to adjust the volatility, and that's why you're a trader. You just never know when the volatility is going to be injected into the market. All right, so we worked our 62 area here a bit, got us a nice little rotation down there, got down to 58 and change, and then coming back into this range. Um, so now we'll just kind of hang here and see what happens next. We have an 8:45 number, so in about 7 minutes or so, maybe something to be released in the market that could affect the volatility. So we try to stay flat when that occurs. She got was it PMI composite, and then at 9 o'clock, top of the hour, we've got existing home sales, and then tomorrow, Jackson Hole and Powell is going to be uh, putting out some remarks that obviously will have some effect. Um, Definitely have some effect, with us. So we have to, especially when you be talking about interest rates and stuff. So have to keep that in mind when we're trading tomorrow. All right, kind of just hanging up here on these highs. If you're still trying to stay short, probably would be 55 would be a good spot if you're trying to stay short against that 62 area. And everybody here trades differently. We scalp, but we're trying to take 2 or 3 points minimally, but doesn't mean that some of our other traders will not take a little bit more or try to take a little bit more out of it. Everybody here, like I said, has different risk tolerances, and there's not one right or wrong way of doing this. You have to do it the way that you're comfortable and manage it according to your risk tolerance. All right. Gonna hang in here. Got a number coming out here in about 4 minutes. So we'll see what it does or what it does to us or not. Next low on the upside we're looking at is up at the 73 area. And that's what we're looking at next. And like I said, this little support would be around 55 if you are so inclined, but we'll try to be flat here with these numbers coming out here in a few minutes, so a couple minutes or so. So pretty much flat right now. Don't got anything on, and we'll see what this number does. Downside support at first level is down at the 46 area. You can see our green band's coming there around 44, and so is the blue band in our hourly. So a little support underneath that 46. Let's see. Settlement price is down at 40, 41.50. So 41.50, a little ways down. Yesterday's settlement price worked very nicely, but all of a sudden in that increased volatility area, that just kind of surprised everyone, and I guess they were, they're just looking at that, waiting for that unemployment thing, which I guess I don't know. I kind of knew something was up with that because it was off, to say the least. But at the end of the day, they ended up rallying. Well, they did close in that range, pretty much in that range that we talked about yesterday, where they were consolidating here a little bit, extended it a little bit, came back down to it, closed in the middle of it. So, but right now, overnight, kind of continued to rally here, and see if where it wants to go from here. See, there was an ongoing chatter about the huge revision of U.S. jobs growth seen yesterday, and what it might signify for the economy and markets. 818 jobs were wiped out in the 12 months through March of 24, or at least 68,000 a month, resulting in the biggest downward adjustment since the global financial crisis. Data revisions are common, but usually not to that degree. Even the large standard deviation typically assigned to non-farm payrolls figures. So that's why they were moving around. I'll read a little bit more about this in a second here. Let's see what this number brings. And again, we're flat here. Downside, our first downside support is down at 46. Only if you're aggressive are you taking the 55 area, especially with this number out. Upside, you can see how the ladder ticket kind of thinned out there a little bit. There's only 20 lots up and down the ladder ticket. It usually indicates that something's up, in case I'm not here to tell you that there's a number. But you can see how it's thinned out a lot. And waiting for this Chicago this PMI composite. Oh, okay. Popped it up and all the way back down. All over the place. Bonds down ticking here a little bit. Okay, just kind of hanging. It's kind of the same range, even though it's whipped around there from 58 up to 65, back to the middle. I mean, we can't compete with this kind of volatility when the computer generated trades are making these. I don't even know how they even like do this. I don't even know what they look at. Not even worth the aggravation to try to compete with these algos. These computer generated trades that are happening here. And they moved way too fast for us. So that's why we try to pick our spots and be patient and wait for them. And it gives us a little opportunity here to compete with these quick computer generated trades that are occurring. Not the favorite type of trade, but hey, they're out there. We have to. It is out there, so we can't, can't can't ignore that they're out there, and we just have to make sure we stay out of their way when they decide to get a little frisky. All right, downside support is the 46. I go. You're very aggressive if you're taking this 55 area here. There's a little support here if you're very aggressive. And you're getting a little bit of quick 2-point scalp here if you did jump in. Got down to 54.75 there. So if you had 55, you got filled and got a quick 2 points out of it. Again, you put your orders in, your stop is in, your exit strategy is in automatically, right? So again, if you're a little aggressive, you took this 55, you had a little rotation up there to 57. And now our next downside support is really down at the 46 area. And if anybody has any questions, feel free to ask in the chat. Just chopping around here, playing out this number. I don't know if it was bullish or bearish. They acted both ways. All right, it continues to downtick here a little bit. Like I said, we are 46, our next area that we're going to be focused in on. All right, kind of just hanging here around our pivot area now. So let's see what it wants to do next. Again, we got to be a little bit patient here. And again, we do have our levels as opportunities, and then there are price action trades that I mention every now and then, intermediate levels, so on and so forth, that create out, scalping opportunities. And again, everybody here definitely has different um, trading risk tolerances. So everybody here trades them differently. You don't have to take every trade I mention or suggest. And any opportunities that we talk about that is taught in our education course that we offer. All right, continue to downtick. We're looking at the 46 areas, our next support level. Again, we scale around there, so everybody scales differently. And if you're just trading one lots, there's nothing wrong with that either. Quickly rotating down here a little bit, looking at the 46 area. The Bureau of Labor Statistics usually surveys 100 to 150,000 businesses each month, but the department then extrapolates from those surveys to get an estimate as to how many jobs were created in the entire economy. Later on, the quarterly re-estimation process looks at 60 million business records, many of which are not available at the time of the initial monthly payroll releases. The records could include unemployment benefits, seasonal hirings for the holidays, unavoidable lags, such as delay payroll data, which can give a better picture of the overall economic activity. So there's a difference between the initial claims and I guess, the summation of the yearly thing. They go from looking at the whole, it's a small portion of it, a small sample, and then they go to the bigger one that they look at every month. Technically, the Bureau of Labor Statistics publishes the data once it has all the reports to avoid revisions. However, many participants need access to the earliest possible read on labor market developments, like policymakers and lawmakers, as well as business owners and investors. Initial estimates are generally in line with trends, but accuracy of the Bureau's labor statistics data has been called into question more recently with the request to revise the birth-death model of corporations or other influence factors, including undocumented migrants. What does this mean? Despite the major revisions that had largely been expected, trends still appear to be positive. Instead of 250,000 payroll additions per month, the figure was almost around 185 to 200,000 mark on average, which likely would have led to the same monetary policy regime from the Fed over the past year. That might look different going forward, given the rising unemployment rate, thereby cementing the Fed rate cut in September. The dovishness even got markets excited on Wednesday, especially after the FOMC minutes showed such an action was likely, with stocks rising amid the chatter of deeper rate cuts. So yeah, they had the what is that, minutes, and a couple of the uh, governors said that they're looking for rate cuts this coming in the next meeting. As we come quickly back up here to the to our pivot area, we went right down to 48 and change there. Our first 3 point is around 47 against upper 46, so did not get filled down there. And coming right back up here, again, we're trading this number or whatever effect this number had on us. Hey, Don, you around? All right, coming back up here to our pivot, so kind of neutral. We were looking to get in there at the 46 area, but just kind of stopped right there before it, before we could jump in. Maybe some of you did. All right. Yeah, I thought that was geared towards you there. You definitely do like to spend your scales a little bit, take into consideration my standard deviation. All right, so now we're back up here. Off those bonds also kind of retraced their little sell off. Yes, no, yeah, that's all right. Who knew? You thought we were going to go back and get our 50 46 for a second there. And you were taking profits and looking for the 46. Totally get it. Nothing wrong with that. Yes, we do have existing home sales coming out here in about a couple minutes now. So we'll see what that brings to us. Again, like I said, we're flat. We don't like to deal with numbers when they're released. You can see how the volatility there almost got us down to our 46 area there. We would have been nice, but kind of missed out just a little bit. Some of you did anyway.